Welcome back. You're watching India Market Open. It's a tepid day for the markets. Range-bound trade completely flat. The Nifty just about 5%, 5 points down, just completely flat at this point. Tata stocks are the ones which are in news. You're seeing some signs of life in, life insurance companies because of good Feb numbers. Telecom not doing too badly this morning, but overall, no great direction. Now, what should you do in a market like this? Abhay Agarwal, founder of Piper Serica, is joining us on the show. Abhay, great to speak with you again. Just wanted to start with, I would say, the news of the day or the newsy pack of stocks of the day, which is on the Tata Group. Earlier, we were asking our experts whether this is an opportunity to buy into some of these companies, well-run companies, most of them well-valued companies, and now a slight negative sentiment because of news flow based on speculations. How would you look at the events around Tata Chemicals, Tata Investment in the last few days?
Yeah, good morning, Tamanna. Great to start the Monday morning with NDTV Profit. We have been watching this whole Tata story unfold. We haven't participated in it because, frankly, there's too much of speculative interest that comes in from, some of the short-term investors looking for an interesting play for the short term. And the problem is that it's not really limited only to Tata Group, Tamanna. It's, we are seeing that in a market that is not topping out or getting into a consolidation zone. There is a lot of news-based price volatility, whether it is positive news or negative news. There is tremendous amount of volatility that I think generally the investors should be careful about, placing their bets on base of a certain expectation of an event. And I think this is a classic examples. We are very positive on all of Tata Group companies. I think they are run very well. Valuations are not stretched. So from a long-term investment perspective, all of them are good. But buying them only on the basis of this news is I think, a little premature, I would say, Tamanna.
Abhay, hi, it's also Samina joining in. I'm going to move focus on the Tata Group companies to all the action, the overdrive SEBI has been in, and of course, the regulator in every way. GM has been barred now from being the lead manager on issuances of NCDs. The stock, of course, is reacting negatively for very obvious reasons. But if I have to extend this conversation, do you think this could have a contagion effect on other capital market players, and we could see some pressure building up in terms of what the regulator has been doing?
Yeah, Samina, good morning. This is so. I think first of all, I would like to compliment both our regulators, RBI and SEBI, that they have been on the ball. They have been very proactive. They have used data science, data analytics, using technology very well to figure out discrepancies. Because what they are reporting now, the data that they are using to back up their actions is clearly based on pretty deep analytics. It is not possible for somebody to humanly do that. Now, in every sector, and I would not go to the extent of calling players good players or bad players. I think there could be oversights, there could be genuine mistakes. I don't know. But clearly, this action is going to give all capital market players, all capital market intermediaries, anybody who we call capital market infrastructure companies, a pause for thought to say, don't get carried away. If there is a law, stick to both the spirit and the wording of the law. Don't interpret it to suit your own convenience. So I think in the medium to long term, this is a great move. It will clean up the capital market otherwise is pretty strong. So I'm not worried about the capital markets in India, but there is always room for improvement, and there's always a room for pausing to take corrective action. So I think this is what it has done. And, so for longer term investors, it's absolutely good. For short term investors in some of these stocks, they may feel the pain. But I'm sure these companies are strong enough to recover from this and get on.
Does that mean, Abhay, the stocks like IFL Finance, JM Financial would be on your buy list? I mean, at some point, they do become attractive, I'd imagine, right? The price, the risk reward becomes favorable for some of these players. And also in that same breath, you do own Angel One and CDSL. Is it time to take some profits off the table on back of stretch valuations there?
Yeah, so Samina, we also have CAMS in our portfolio, and we see Angel One, CDSL, CAMS, and these have been multi-year holdings. I think we have had them since all of these stocks came up with their IPO. They have done well for us, and we see them as very core participants of India's capital market growth story. So we are, let's say, at about $4 trillion market cap. We're going to $6 trillion market cap over next 3-4 years. We're going to go to 10, 10 will become 12. So the direction is quite clear. Now, in that situation, if you have companies like these that we named, and none of them are buy recommendations, by the way, as a disclaimer, but directionally, if you look at them, the leadership positions have already been created. Angel One has a 20% market share in retail broking. You have CDSL in a dual player market along with NSDL. You have CAMS along with K Fintech in a dual player market. So industries are consolidated. Valuations may look stretched, but that's also dependent on the predictability of earnings growth and also the quality of earnings. So that is why I think if you need to back India's capital market growth story, I think these are great choices. On the first question, whether we look at some of the fallen stocks, yeah, absolutely. We are always looking to get in if there is a overreaction technically, and that gives us a buy opportunity. We would always be open to that, Samina.
Just a quick look at what's happening with NMDC. Singapore iron ore futures have, I would say, crashed 4.5%. And you're going to see a bit of pressure there. Let's pull up NMDC steel as well. 2.5%, 3% down on NMDC right now. Abhay, I wanted to get your take on the real estate pack. The index is looking decent today, led by a macro tech. There's QIPs, on offer for a couple of companies trying to raise money. But also what SEBI has done over the weekend by notifying small and medium REITs. How much of an impact do you really see this having?
I think this is a good move. I think it allows smaller investors to add real estate in their portfolio in small units rather than subscribing to the big REITs which are focused only on commercial property or actually buying a house property. So I think this is a good way to create a new asset class and at the same time give money to the REIT managers so they can invest on behalf of investors in residential projects. I think it's a good outcome, a good opportunity that will become bigger and bigger. Also on the real estate part itself, the whole real estate sector has gone through a very extended consolidation phase, starting with the demonetization, then subsequently there was RERA implementation, and then the GST implementation. I think there were continuous series of changes that has completely restructured the real estate sector, made it cleaner, more transparent, and created it into a good asset class for investors to own these real estate stocks. And I think that's what we are seeing in terms of real estate stocks performance over the last 12 months. And I think this new addition of REITs for individual investors, I think it's a very, very positive move. I would welcome it. It allows even small retail investors to allocate to real estate in their portfolio.
Okay, so it is an opportunity for investors to allocate real estate in their portfolio. I don't know if 10 lakhs as an entry barrier is a bit high when you're talking about retail investors. Maybe that needs to be looked at, and real estate stocks may be a better option. Abhay, I wanted your take on the insurance play as well. LIC is losing market share, down another 520 bips in the month of Feb, but the overall AEP growth has been good. Even for the insurance pack, the numbers in Feb have been good, perhaps tempered by a year-end flood. But overall, do you like anything in the insurance space? What would be your best bet? And would it be life insurance versus general insurance companies?
Yeah, so we track insurance very closely, Tamanna, because we also have a private equity fund where we have made investments in some private insurance companies. Right now, we do not have any insurance company in our portfolio, and for the single reason that the valuations are quite stretched. So while insurance is going to be a long-term story, as just like capital market story that we discussed, but so far, maybe we are wrong, but we have shied away from adding any of the large insurance companies in our portfolio. There is one standalone health insurance company, the largest one that we are looking at closely. Maybe at some point of time we'll add it to the portfolio. But I think insurance is a very, very long-term story in India. Next 10 years, 20 years, it will just keep growing as there is product innovation, and as the regulator also gets the confidence that these companies can innovate and bring value to their policy buyers. We track that space pretty closely, but again, the valuations haven't really corrected. The private companies are still at 4 to 5 times embedded book value. So we would probably wait for a better timing to add them to the portfolio.
Very quickly, what stocks currently feature on your shopping list? What is it that you're waiting to correct and go out and add to your portfolio? And also your top 2 holdings in your portfolio that you're currently still constructive on and maximum overweight on.
So one sector that I've been talking about and I think is going to see inflows this year is the large cap pharma space. And I think we have a couple of stocks, large cap stocks in our portfolio already. They are not our top holdings, but we will keep adding to them. And the reason for that is that, again, just like real estate, this is an industry that has consolidated for the last 4 or 5 years. Finally seeing pricing improvement in the US, finally seeing reduction in raw material prices from China and locally. And also, product pipeline is very robust. Some of them have 150 products that will get launched from a single company in the US and in India. So I think this is one sector, the pharma sector, that can hit a purple patch this year. And the second sector, Samina, we are looking at closely is the agrochemical space. Again, small companies and large companies that cater both to Indian farmers, Indian agri sector, and the international markets. I think these are the 2 sectors that we believe there is a lot of value under participation, and we are happy to make our bet with a 2 to 3 year perspective.
Anything specific here, Abhay, you can add in these spaces, especially in large cap pharma when you're talking about and in the agri space?
So in large cap pharma, again, not a buy recommendation. These are stocks in our portfolio. We have Dr. Reddy's and Divi's. We believe both these companies have done a lot of innovative work. Divi's more so because of the CDMO business that gives them an annuity-like income that keeps growing. And Dr. Reddy's for the reason that it has probably the strongest pipeline of launches over the next 12 months in US and in India. And then in the agrochem space, we have Bayer India, which is one of the largest players in Indian agrochemical crop protection space. And we have a small cap stock called Dhanuka Agritech. And we are in the process of researching more ideas in that space.
Yeah, so agrichem is looking interesting. Thank you so much, Abhay. Always a pleasure to speak with you. And